we need to talk about something big, something most people in crypto still haven't wrapped their heads around yet. Because when a CEO like Brad Garlinghouse, the man who has led Ripple through the most aggressive regulatory war in modern U.S. finance, officially joins the board of a CFTC-regulated U.S. derivatives exchange called Bitnomial, this isn't some friendly partnership announcement. This isn't a PR headline. This is a strategic, calculated chessboard move that tells us exactly where institutional crypto in the United States is heading, and more importantly, what Ripple is preparing to become over the next decade. And honestly, if we pay attention to the details, the dates, the regulatory signals, and the power structure behind the scenes, we are staring at one of the clearest early signs that the U.S. crypto derivatives market is about to change forever. And yes, this might be a move that shapes the future of Ripple, XRP, the stablecoin Ripple is launching, and the trillion-dollar derivatives industry. To understand why this moment is so critical, we need to start with who Bitnomial actually is, because most viewers outside the derivative trading world barely know the name. Bitnomial isn't a random offshore exchange. It's not a Bahamas-registered crypto casino with questionable liquidity. Bitnomial is one of the very few digital asset companies in the United States to receive a CFTC-designated contract market, or DCM, approval, a license granted in April 2020 that allows them to operate a fully compliant U.S. futures exchange. And that alone puts them in an elite category, because out of thousands of exchanges globally, less than a handful hold the regulatory approval that Bitnomial does. And they didn't stop there. Bitnomial later secured regulatory permission to operate a clearinghouse and a brokerage, meaning they now control the entire institutional pipeline, the exchange, the clearing layer, and the order flow. If we think in traditional finance terms, that's like being the CME, the OCC, and a prime broker all under one roof. So the question becomes, why on earth would Brad Garlinghouse, a CEO who already runs one of the most recognized fintech companies on the planet, choose to join this board at this moment in time? Why would he align Ripple so closely with a U.S. derivatives venue right when the U.S. regulatory landscape is undergoing its most dramatic transformation since the 2008 financial crisis? To answer that, we need to rewind to Ripple's strategic direction over the last few years. Let's start with 2023, the year Ripple won the partial legal victory against the SEC when Judge Annalisa Torres ruled that XRP itself was not a security when sold on exchanges. That ruling broke open the door for institutional clarity, but what came after was even more telling. By 2024, Ripple shifted its strategy heavily into regulated institutional finance. That's when we saw Ripple's acquisition of Metacode for $250 million, signaling a push into global institutional custody. Then came Ripple's official announcement in early 2024 of a US dollar-backed stablecoin, an asset designed to compete with USDC and USDT, but with the regulatory and compliance approach those companies wish they had today. And then it happened. In October 2024, Bitnomial announced a $25 million Series B funding round led by Ripple, and buried within that announcement was the line that caught our attention. Brad Garlinghouse would be joining Bitnomial's board of directors. This was not accidental. This was the moment Ripple formally entered the derivatives markets conversation. Because Bitnomial isn't just another exchange. It's one of the few U.S.-regulated venues where crypto futures, perpetual contracts, options, and eventual stablecoin-based instruments can legally exist under CFTC oversight rather than SEC scrutiny. And that distinction, CFTC versus SEC, is everything. Because for years, Ripple has battled the SEC. Ripple knows better than any company in crypto what it means when the SEC claims jurisdiction over something they shouldn't. But the CFTC has been openly friendlier to crypto for more than a decade. Bitcoin futures launched under the CFTC in 2017. Ethereum futures were approved. Derivatives experts often call the CFTC the grown-up regulator because their mandate is narrower and their rules reflect how markets actually work. So when Brad joins a CFTC-regulated exchange, we need to recognize the significance. Ripple is aligning itself with the regulator that institutions prefer, the regulator that already oversees trillions in derivatives, and the regulator that may ultimately win control over the broader digital asset market once Congress finishes drafting comprehensive legislation.
This is where we start to see the full picture forming. Let's walk through what Ripple gains from this move. First, Ripple gains a seat at the table in the U.S. derivatives sector, a market that clears over $600 trillion annually in global notional value. If Ripple wants its stablecoin, its liquidity products, and its cross-border settlement rails to be used by banks and institutions, they need a regulated venue where derivatives can be priced, hedged, and cleared. Bitnomial gives them that. Second, Ripple gains insight into how U.S. institutions trade risk, how liquidity is structured, and how settlement frameworks are evolving under new digital asset rules. Third, Ripple gains influence over how next-generation digital derivatives are built, from stablecoin-settled futures to potential on-chain margining systems. But here's where things really get interesting. Bitnomial didn't just take Ripple's investment. They're integrating Ripple's upcoming USD-backed stablecoin into their infrastructure. This tells us everything about the road ahead. Ripple's stablecoin won't just be a payments coin. It'll have institutional derivatives use cases. Imagine futures contracts settled in Ripple stablecoin. Imagine options collateralized with it. Imagine institutional OTC desks leveraging it for margin.
In financial markets, the asset that becomes the preferred settlement currency of derivatives markets gains extraordinary power. The US dollar holds global dominance not because of politics, but because it is the backbone of global derivative settlement. Now, Ripple wants a piece of that pie. And let's talk about Brad himself. Brad is not a passive player. He's been in leadership roles at Yahoo, at Hightail, and in Silicon Valley long before Ripple. CEOs at his level do not join boards unless the alignment is deep and strategic. A board seat means influence, real influence over direction, compliance, partnerships, technology integration, and market expansion. And yes, this opens the door for something nobody wants to say publicly yet: the possibility of XRP-based financial instruments being considered within a regulated derivatives framework in the future. That doesn't mean XRP futures tomorrow. It doesn't mean XRP options next month. But it does mean this: Ripple now has a direct line into a CFTC-regulated venue, and historically, assets that achieve clarity and deep liquidity eventually get listed in derivative markets. Look at Bitcoin, look at Ethereum. Market structure follows regulatory clarity. But we need to be realistic. The bigger play here is Ripple's stablecoin, Ripple's institutional liquidity network, and the evolution of real-time asset settlement for banks. XRP benefits indirectly, but significantly because the stronger Ripple's institutional ecosystem becomes, the more utility moves through the XRP ledger over time. Now, before we go deeper, this is a perfect moment to insert our quick engagement call. And honestly, if you've been watching closely and you can see exactly where this move is heading, if you can feel the shift happening between SEC versus CFTC oversight and Ripple positioning itself right in the middle of that power shift, then do me a favor, hit that like button real quick. It helps push this video to more people who need to understand what's happening behind the scenes, and it tells us that we're explaining this the way financial viewers want to hear it. All right, now let's go even deeper. The timing of this board appointment lines up perfectly with the broader global regulatory map. In 2023, Europe activated MiCA, giving crypto companies a regulated path for operations. Singapore expanded its licensing framework. Dubai finalized its VARA rules. Japan revived XRP liquidity across exchanges after the SEC ruling. Everywhere except the United States moved forward. But by late 2024, the U.S. started catching up. Bipartisan crypto legislation entered Congress. Committee discussions intensified. The CFTC publicly argued that most crypto should fall under their oversight. This is the moment Ripple stepped in.
Bitnomial's exchange isn't trying to be Binance. It's not trying to be Coinbase. It's trying to be the CME of digital assets, the institutional futures and clearing venue that follows all the rules and delivers liquidity to professional traders, banks, and corporate hedgers. Look closely at the board now. Alongside Brad Garlinghouse, Bitnomial's governance includes deep regulatory experience, derivatives veterans, and infrastructure specialists. Brad doesn't join boards where he can't influence strategic direction. His presence alone tells us that Ripple's involvement isn't limited to financial investment. It's integrated, structural, and long-term. Now, let's zoom out and analyze what this means for the U.S. crypto ecosystem as a whole. For years, institutions stayed away because they lacked compliant venues. Offshore exchanges like FTX collapsed. Arbitrage became harder. Liquidity fragmented. The SEC sued everyone. Exchanges like Kraken and Coinbase fought back, but remained under tight observation. But a CFTC-regulated derivatives clearing organization? That's the safe zone institutions trust. That's where real capital flows. And now, Ripple is inside the room. From a global financial architecture perspective, this is exactly how major market shifts begin. Not with headlines, but with strategic infrastructural alignments. When PayPal integrated stablecoin rails in 2023, the market barely reacted. But in hindsight, it was a pivotal moment. Ripple joining Bitnomial's board is similar. It's small on the surface, but it will be enormous in hindsight. Let's talk future scenarios. Over the next 12 to 36 months, we can expect Bitnomial launching more institutional derivatives contracts, Ripple's stablecoin becoming a collateral option within the exchange, increased liquidity pathways between Ripple's on-demand liquidity system and Bitnomial's clearinghouse, banks experimenting with tokenized margin and tokenized settlement, Ripple participating more heavily in U.S. regulatory dialogue, Ripple becoming a backbone provider for U.S. digital asset settlement infrastructure. These are not predictions. They're logical extensions of their current trajectory. And the biggest takeaway for us as viewers, investors, and analysts is this. Ripple is positioning itself not as a crypto company, but as a financial infrastructure provider for the next era of regulated digital markets. That's the move. That's the strategy. And Brad joining Bitnomial's board is one of the clearest signals of that shift. Let's finish strong. When we step back and connect the dots, we see a company setting itself up for institutional dominance. We see Ripple aligning with CFTC-regulated infrastructure. We see a stablecoin strategy that goes far deeper than payments. We see liquidity products that require regulated futures clearing. And we see Brad Garlinghouse placing himself exactly where the future of U.S. digital finance is heading. So the big question is simple. Why Bitnomial? Because Bitnomial gives Ripple exactly what Coinbase wishes it had: direct structural access to U.S. derivatives under a friendly regulator. And that could reshape everything we thought we knew about Ripple's next phase. If you're watching this and you appreciate deep dives like this one, hit subscribe so you don't miss the next major move in digital finance. We're going to be tracking this entire shift together, step by step, because what's happening behind the scenes is bigger than a board seat. It's the first chapter of institutional crypto entering a new era.